Hi everyone, so let's now take a look at different types of insurance products. Okay, let's see what we've got. First of all, it's really important we get a grip on these two main key terms that you need to understand for this part of learning AIM-A. Firstly, insurance. What is insurance about? Well, as we can see here, it's an agreement with a third party to provide compensation against financial loss according to conditions set out in that particular policy agreement, that insurance policy agreement. Okay, meanwhile, a premium is the regular payment made to an insurance provider. Now, if you've checked any sort of comparison website, which I would suggest you do, just have a look at car insurance premiums or home insurance and so on, then you'll see that you will be able to actually make regular payments, regular premium payments, or you can make one-off annual payments. So there usually is some degree of choice and flexibility how you actually go about paying those premiums. If you pay on a monthly basis, you'll often find that the annual charge is actually a little bit higher. Okay, so let's take a look at what we've got. The first one's nice and straightforward here. We've got car insurance, of course. It protects the driver's vehicle, it protects its passengers, and it helps to protect other road users, of course. So that's really useful. It's a legal requirement, of course. It's protection against theft or damage. Now, it does of course depend upon the insurance policy that is actually taken out, and we'll look at that in a bit more detail in our next lesson. And it also helps to protect those other road users and really provides peace of mind to others that you are insured. So if there is damage caused by you to their vehicles, then at least your insurance policy should help to cover that. Okay, the disadvantages, meanwhile, though, we can see that the premium can be high. Any of you lads there, you're likely to find that insurance premiums for you in particular are very, very high when you first become a driver at age 17 or even 18. Okay, and that's because you're in a high risk demographic, I'm afraid. Okay, the excess amount is also often needed to pay, and that could be about £500 or so. That's commonly round about the sum that you're looking at. So because that policy excess, it means the first £500 of any damage caused you will need to pay yourself. Okay, then we've got home and contents. Okay, so now obviously moving on to look at the home and contents insurance. So home cover is obviously on the physical building itself, on the structure of the building and the integrity of that structure, as well as protection against fire and things like that. It also has contents insurance here on your specification. You need to be clear on that, and of course contents insurance is about the contents of that house. So this again helps protect against damage, which could, certainly in the case of a physical building, be massively expensive otherwise. Now, premiums are an additional expense here, okay, to home ownership. So that's something else now that you also need to pay, and perhaps on top of your mortgage product that you've actually taken out in order to buy the house, you then, and your mortgage agreement will stipulate that you must have home or housing insurance, okay? And then when it comes to contents insurance, of course, some items have sentimental value. So while you may be able to retrieve much of the actual financial loss that's made following a theft, perhaps, you may not be able to actually retrieve that sentimental value. Okay, so finally on this session, we've got life assurance and life insurance, okay? Important to understand the difference between these two different types of product. So life assurance is an ongoing policy to pay a lump sum upon death, whereas life insurance is a policy for a set period of time to pay a lump sum on death. So that is the distinction between these two types, that this is an ongoing policy, whereas this one, the life insurance, is really about a set period of time. So make sure you're clear on that. Okay. It's going to provide peace of mind to family members. If you've got children, it's useful to know, of course, that there will be money and if the worst was to happen for whatever reason. So that's helpful for family members, of course, and it also ensures that after a death, that financial obligations can actually be met. So that's important as well. Some people, of course, are not eligible. Okay, so if they're deemed too high risk, then they would not be eligible for such policies, either of them. And premiums can be expensive and may actually never be claimed because, those people may not actually die, which is great news, but the downside of that is that you've obviously outlaid a lot of cash there. Okay, there we go. One more lesson on learning AMA and we'll get this rounded off. Thanks, guys.